The five key takeaways from today's monetary policy is as follows. The first one relates to its understanding and the likely trajectory that inflation would take over the next maybe 3 to 6 months is important. Even though inflation have shown a downward trajectory till the month of December, up till which the data is available, RBI feels that upside risk to inflation is still very much intact, and these can actually come from the hardening of crude prices in the international market. Secondly, because of the global situation, what may happen is that the exchange rate can come under pressure, so that could be another source of inflation. And the third one, of course, relates to the house rent allowance, which is expected as part of 7th pay commission to be implemented in the fiscal year 18. So these three things together probably will exert pressure on inflation, and RBI believes that they may to some extent nullify the seasonal impact that inflation is currently witnessing. So its guidance with respect to inflation is still around 5% till the March end of the current fiscal. So that's point number one, which I think is important to understand why RBI chose not to tinker with the rate in today's policy. The second point, of course, relates to the transmission. Even though RBI has cut policy rates since January 2015, but the banks have not passed on the entire rate cut in the real sector, and RBI, although believes that post demonetization some acceleration has been witnessed in terms of passing on this benefit by the banks to the consumers. However, it is still not enough, and maybe one will have to watch how the liquidity that is still in the system will play out, and to what an extent that will help the banks to cut the lending rates further. Then another important point that emerges from RBI's commentary on monetary policy relates to that even though Government of India has presented its budget on 1st of February, and we know that monetary policy and fiscal policy work in tandem with each other, and the government stance by keeping 3.2% of GDP, the fiscal deficit, has clearly shown that the fiscal year 18 budget will be largely non-expansionary, which would have certainly given RBI some comfort that there will not be any pressure coming from the side of the government because of higher spending. However, today's commentary nowhere mentions anything about the fiscal year 18 budget, which is a bit surprising, because some of us were expecting that now that the fiscal stance of the government is known to the RBI, and perhaps the inflation is waning, maybe RBI will take government's fiscal stance into consideration and may actually think of going for a rate cut in the month of February rather than kind of doing it somewhere in the month of April. However, this appears to be missing from the entire commentary of RBI. The fourth point that RBI makes in this regard is that demonetization did impact certain sectors, namely like auto sales, then cargo, freight movement, all of that got adversely impacted. However, it's not that everything is bad. There are certain bright spots also, like foreign tourist arrival, tractor sales, and likes of this did not see the brunt of demonetization impacting them. So to that extent, the overall impact of demonetization, if one dissects it in terms of sectors, then it is not that everyone got adversely impacted. Some sectors yes, but there are other sectors which did not. So this is in a nutshell, in my view, are the key highlights or key takeaways from RBI's monetary policy today. And I mean, net, one can say that since RBI still is somewhat hawkish about the way the inflation may pan out, it is holding on to the rate. Maybe another 2 months data which will become available at the time of April, when RBI will be coming up with its annual policy statement for fiscal year 17-18. It may choose to have another round of assessment of the inflation trajectory, and then, but in any way, my view is that whether any more rate cut is feasible next fiscal or not, although I believe there is a scope for 25 basis point cut, but by and large, I think we have already moved to a situation or a level where more rate cuts will not be possible, or in other words, let me say that we are now nearing the end of the rate cut cycle. Thank you.